Hello. What a day. And it is the Energy Day, of course. It's a very busy day. I appreciate we're at the end of it. But it's an exciting subject that we are here to discuss. So I'm delighted that in partnership with the Union for the Mediterranean, we have been able to organize this panel during COP27, and again, great to have it on the energy. Also in the context of the Egypt's Nexus on Water, Food and Energy platform, which EBRD is proud to be a lead partner on. So, but of course today, it's less about gigawatts probably, but more about the significance of scaling up private-to-private renewable markets in the southern and eastern Mediterranean region. Corporate sourcing of renewables is growing, of course, in many countries. And even though most governments are not yet there with adoption of specific policies, regulation, and it's still an evolving subject, as we know. The commercial and industrial sector is responsible for 2/3 of the global energy demand, electricity demand. And where and how companies in this sector source their electricity from, it will be a decisive factor for the overall global decarbonization agenda, and of course for the sustainable future for the planet. Also another factor, a carbon tax, as it becomes a reality and renewables provide low-cost electricity, companies and export-oriented companies will be turning to renewables more and more to play a key role in enabling their energy resilience and competitiveness. We see great examples here in Egypt. We are proud as a BRD to be part of those examples, but also in Morocco and Jordan. So this region is really picking up on private and private. It is great to see some of the important players in the renewable energy market in the region with us today. And it's, of course, Infinity Energy, Taka Arabia, but critically, an off-taker, ASCOM, and a climate fund. The EBRD has supported development of private renewable projects in Egypt, Morocco, and Jordan, as I mentioned, and other regions in other countries in the bank's region. In 2015, the bank established what we call CEMET, Private Renewable Energy Framework. It's just called SPREF, and everybody knows what it is, to support the development and financing of private-to-private projects. Concessional funds from donors like the Climate Investment Fund is critical to support this SPREF program, which today financed 4 projects for a combined capacity of 211 megawatt. So we're confident the CNI sector and segment will play an increasingly important role in combating the climate change. And I think today's discussion will give us an opportunity to hear about challenges, opportunities, prospects, and maybe we will hear from financiers how this whole thing should be financed. So with this, I'm very delighted to do a quick round of intros. I'm joined today by Mohamed Mansour, Chairman and CEO of Infinity Capital Investment and CEO of Infinity Energy, a trailblazing entity in Egypt and wider Africa region, where EBRD is a proud investor. We all saw the mega news, Mohamed, at COP27 about gigawatts, about what you are doing. It's really amazing. And of course, it started from probably much smaller capacity, but it's an amazing speed at which you are going. But apart from gigawatts of utility scale solar, you're also really active in the private-to-private segment. And it would be very interesting to hear your views today on where you see this is going. We understand it's 70 megawatt of private-to-private included at the moment, so it would be great to see it. I'm also delighted to welcome Pakinam Kafafi. Pakinam, really, it's a pleasure to have you here. CEO of Taka Arabia since 2013. Pakinam has played a key role in developing the business, which is now counts to 3,500 employees. Pakinam is ranked by the Forbes Middle East Power Businesswoman. And this success is, of course, preceded by her great investment banking career, as we know. And now it's all in the private-to-private. And Taka Arabia, established in 2006 as Egypt's major private integrated energy company, which also has operations in many other countries. We're delighted to see that you are covering private-to-private renewables in addition to natural gas, EPC electricity generation and distribution. So it's all an integrated package. And of course, for us, it's Taka PV. It's most relevant for today's discussion. We know that the company's first project, financed by the bank, a 6 megawatt solar PV plant to sell electricity to dinner farms. So something, it's the largest milk producer in Africa. And we know that you have overall 21 megawatt in capacity developed in 22. So this includes a 7 megawatt project to sell generated electricity to Ascom Carbonate, also financed by EBRD. Now a very important panelist today, our precious off-taker. And of course, we all understand why, the significance of this. I'm really delighted, Ahmed, to be able to welcome you. Ahmed Niazi, Managing Director of Ascom Carbonate and Chemicals Manufacturing. It's just one person on this panel, person who actually pays for electricity produced, but it's very important. So a key figure to the bankability of private to private. Ahmed is a Managing Director with 17-year experience at Ascom in top positions and covering a number of sectors. Ascom itself, established in 2009 as a first manufacturing plant specialized in production of calcium carbonate, a material with vast applications in many, many areas. It's a subsidiary of ASEC for mining, a leading geological mining engineer and recently manufacturing company in the region. So you can see how it goes in different sectors and how different sectors might need renewables. Last but certainly not least, Daniel Morris from who is a climate energy lead from Climate Investment Funds. This is the entity we already know very well. Daniel has spent the past 12 years working to build up economic and policy solutions to adequately address the climate crisis. He is currently the program coordinator for the Clean Technology Fund, another entity we know very well, and for scaling up renewable energy program for low-income countries. So this is CIF, which is a global leader in climate finance, which is the leader covering 72 middle to low-income countries, with 11 billion of pledges to climate action. So without further ado, and thank you for listening to the introduction, because I just wanted to highlight that in this area, it's really important to have different stakeholders and to flag where they all come from. But moving on to the topics of the discussion, maybe we will start with taking stock of where the sector is now and what is the vision for it to grow. And maybe on this, I can give the floor to Mohamed, to you, that you can share your views.
Well, I think the sector is in its infancy phase right now. Okay, currently there is demand. Obviously, renewables is a very efficient way to produce electricity, and the price advantage to the off-taker is, very apparent. Where we're struggling is actually to get the regulations on the ground. The wheeling charge, for example, the last I read was it's reviewed every year. We cannot price a 20-year PPA with a big variable like that changing year on year. So I guess, definitely you have the demand, you have the resource here in Egypt, you have the know-how to be able to construct and provide this electricity. But we just need, one, the framework to be clear and not change so we can price. And two, we need the infrastructure to absorb all this new capacity coming in on the grid. So in my opinion, that's the two main things that we need.
Thank you. And provided we get to those two things, so the vision is for it to take off, as you said, sky is the limit. But maybe, Pekanam, over to you. Where do you see this going? We will be talking about barriers and constraints, but where do you see this now? What does it mean to be a private-to-private renewables developer in Egypt? And
first, before I start, I need to congratulate Muhammad. We're so proud and happy, and I think we are all partners to do more green projects in order to make a better life for the next generation. If I talk about private to private, well, you have a lot of challenges and pillars, as you said, okay? And let's focus in answering this question, the challenges regarding the industrial. The problem is, we as TACA, we foresee that there is a change. And last couple of years, our strategy was to focus to private, and we succeeded in a way to make several projects, agriculture, industrial, and touristic. However, we're still way so far. We are still a dot. Why? Because, of course, we're going to come back to the regulation and all this, but if we focus about the client himself, there is much awareness we need to do. And this awareness is not still yet there. All their focus to go to green is because they think it is a saving to their pocket, to their budget. Yani the famous word, one of the clients, and I always say to everybody, he just told me, the only green I know is dollar. How much you're gonna give me? So that's the reality. It's a reality. So we need to educate the companies. Even the multinationals here in Egypt, the headquarters need to make them understand that renewable is a long-term project. It's a 25 years project. You cannot build for a 25 years project, for a 1 or 2 years of savings. You have to have a long vision. As you said, 2/3 of the emissions are coming from industrial. They need to understand that they have a responsibility for the climate, i.e., they can put it as a marketing budget, they can put it in whatever. You see some companies have millions in marketing budget, and when you talk to them about renewable, how much % discount you're going to give me against the government? No, it should not be like that. Different pillars, different challenges. We need each one to work. We have a role, the client have a role, the government have a role, and the finance have a role. Without the 4 pillars, we're not going anywhere. We have to work all together.
Thank you very much, Mohammed and Pakinam. You touched on a few things, and I see the sort of the trend is going into addressing constraints and barriers, because this is the point of the discussion. But important that there's also the issue of awareness among the corporates, the issue of sky is sort of the limit, the actual potential out there that is good for that has to be accounted for. But there are, of course, constraints. There are technical, legal, financial constraints, and I think an off-taker may be the best position. Let's hear it from the off-taker side. So if you could maybe call, not on the financing, I know you leave it to probably Pakinam to sort out, but what are the technical, regulatory constraints that you're facing?
As you said, Aida, I am the off-taker in this session, and I'm surrounded by the experts in providing solutions. What we did is we are a manufacturing company in Upper Egypt, and we signed this contract very recently of doing a 7 mega solar panels to cover 16% of our needs. We are a manufacturing company that exports to 45 destinations around the world from Upper Egypt. We started this project because we believe of the future, of the importance of this for the next 25 years, as Pakinam said. But are there challenges? Of course, there are challenges. What are these challenges? The first point is the private sector. They don't want admin barriers at a very early stage. I'm talking about since you decide that you want to start a project, a renewable project, until you start the first day of contracting to build this solar plant or whatever. If we ease the regulations and it takes maybe 2 months to start, it makes a big difference versus taking 1 year or 2 years to start the project itself. So the private sector needs this ease of regulations in order to go on and move with the project. Another important point is I don't want in the middle of my project or at any time to have a hike in fees or any additional fees, even if these fees are piasters. But these little piasters, if they are added at any point of time. Without our previous planning, it can ruin the whole thing for us. So we don't want surprises. We don't want everything to be fixed and stable. This is very important for the private sector. The third point is, from our experience, the land itself. The land could be a very big challenge, because in order to do the project, to start our project in Upper Egypt, we needed 25 acres of land. The regulations in order to finalize the 25 acres of land from a big circle, I don't want to go into details, but it takes time to finalize the land. To be honest with you, if we had the option of wheeling, I would go for wheeling for sure. So we need to think of easier options for the private sector. And if Egypt today, for example, as a country, starts the wheeling project, I think it will attract a lot of the private sector. The fourth point, of course, it makes a great sense, and I think Pakinam talked about it. The private sector wants green energy, but they want green energy at a cheaper price than what they pay to the current regular bill right now. So of course, cheaper is important, but we want incentives as well. So the carbon credit, if Egypt is starting to think about carbon credits and they want to implement something, I believe this would be great, and we are really looking forward to this carbon credit system they want to apply. Thank you.
Thank you. I mean, it's a great range of things that need to be sorted out from, and just, I mean, from the wheeling setup in the country to permitting, land permitting, to the bureaucracy in the sense of how long it takes. To Pakinam's point, at the end of the day, they watch the bottom line, and it has to be affordable. It has to make economic sense, and the carbon price, which is coming into reality and which is starting to will start biting into people who do not take into account, there is a carbon cost associated with this. I mean, it's coming. CBAM is coming. So, but maybe Mohammed, you could say a few words on the barriers that you are seeing in your project.
The main barrier again is having feasibility over the tenor of the contract. How things are stated today is that this can change year on year, which definitely, either I would price and run the risk of losing, which I wouldn't do, or the client would agree to a certain price with the risk of that price being hiked, which the off-taker would definitely not want. So again, definitely if the regulations come in place and don't change, I think that's the key. And I'm not saying to keep the wheeling charge stable for 20 years. I'm just saying that the day we lock the contract, that's our wheeling charge. It can increase next year. The new contract will factor that in for the next 20 years. And I think maybe that's the solution on how we can solve this wheeling charge issue.
I want to add on the land limitation, because this is a very crucial thing. As Ahmed said, most of the industrials has no land beside them. So we have no solution to scale up, and I think we don't have an option except to scale up. We have to go to wheeling. We have to use the grid. So we need to make a centralized land and give our clients the renewable through the wheeling. And yes, the wheeling prices has been there, but there, as Mohammed said, they say they're gonna look at it every year. So how can we create the model? Think about it. Second, there is merge fees. There is a lot of things that we need to understand, and we need to have it in order to be able to scale up. Because if you want to scale up, and I'll give you an example. Dina Farm, for example. Why we did 6 mega, we didn't do more? This is the land available. Ahmed was saying 16% will be with renewable. I know that for sure until the storage is economical and the batteries is economical, I will never be able to do it 100%. he has to have a hybrid mode. But I can increase the 16% if I had the land. This was the available land beside ASCOM. So in Suma Bay even, I had it 18%. Why? This is the land that beside the service area that he will not, because land there is very expensive. This is beside the sea. He would rather do an hotel there, not putting panels. So again, the limitation of land goes back to square one. What Muhammad said, we need wheeling, we need to make centralized in order to scale up the industrial, agriculture, touristic, whatever.
Thank you. Thank you very much to all three panelists. I mean, this is the centerpiece of today's panel, I think, is the issues, the barriers. And what I'm hearing is that the stability of the cash flows for developers, it's the tenor of the PPA that you're getting, it's the affordability of the price that you will be paying for the green energy, it's the, not so much availability of the land, it's actually the will and regulation that is to be put in place and would be stable. Well, maybe changing year on year. Mohammed said it's okay as long as it's not on the project that was approved. It's also the fact that the grid itself has to sustain the growing portion of private to private, and and just back on the green certification, maybe the certification of electrons that are green as CBAM, as carbon tax is coming on board. So lots of issues. Danielle, what are the solutions? I think you as a donor, as a concessional finance provider, you see this market barriers, you see this faults in the system at the moment. How do you think we can address them? Over to you.
Yeah, thank you, Ada. I kind of feel, having been on a number of these panels, there's always that big question that we get asked in terms of financing, what we can do. So I'm going to do my best to answer what I can, specifically for the region. For those who may not know, I'm with the Climate Investment Funds, and we provide concessional resources to 72 countries around the world to do clean energy and technology, forestry, adaptation, etc. What's particularly interesting is we've had sort of a long-standing relationship with, of course, our partners in EBRD and in the region. And what we try to do with those concessional resources is really bring them to bear on these barriers and facilitate things. So I guess at the end of the day, my job is to make sure that I no longer have a job in this sector, right? Because if we make private to private happen, then the public money isn't necessary. But right now, it's key. And public finance really can pave a pathway, a viable pathway for renewables to come in, establish a foothold in a region, and grow such that the kind of finance that I provide won't be necessary. So how does that happen? Well, back in 2015, we actually had an opportunity to provide some resources to this SPREF program, the facility itself. And to give you a sense of scale, the entire facility has about 920 million in it. Our concessional resources were 35, so about 4% of that. And what that does, these concessional money, whether it be highly concessional loans or grants, are really meant to be targeted to get specifically at these barriers that can facilitate the other kinds of finance, the private sector finance that everyone wants to see flowing. In this particular example, one of the things that we did initially was we provided some TA to facilitate a dialogue on regulatory and policy changes. Really try to get at the heart of some of these issues that you all have identified. What we were able to see from that was we had some projects that actually were able to act under a regulatory regime to, for the first time in the region, contract directly with an off-taker that specialized in sort of it was a high voltage user, right? And that was able to sort of establish a baseline. Now the question is, can we use finance and sort of that experience to spread that model and grow it so that things can kind of take off on their own. So from our perspective, we look to be effective in that. We look to sort of pave a way to help companies learn as they go a little bit, right? And work with their private sector partners to sort of establish good best practices and carry those forward. Learn how to do that without the necessity of this highly concessional money. So it's always a challenge. It's a challenge in any area. The good news is technology prices, at least in the renewable sector, have come down quite a bit. I read a recent Bloomberg study that said 87 countries in the world have sort of achieved a tipping point in renewables, which means about 5% of their generation is from renewables. So there's momentum there. Storage technology is following a similar path, although it's about maybe 7 to 10 years behind renewables. Once the storage technology is sort of as proven as the renewables, I think we'll be able to continue to sort of build the faith amongst private investors, and such that when you all come in, whether it's as a developer or as an off-taker, you sort of understand the technology, you understand the structures, and if we can get the policy and regulatory changes necessary, then the idea is that this will all start to flow, and we can really see kind of radical changes over a short time.
Thank you, Daniel. I mean, building the faith. I think that's if you can summarize in the private developers, private off-takers. It doesn't get any more private than that. So it's really, you need to spur the market. You need to build a structure that can support it. So maybe before I pass the floor to our esteemed host, to Mr. Gramenos Mastrogianni for the closing remarks. We have some time. I just wanted to hear from each of you, in 3 sentences maybe, what's needed for the private sector to thrive. It's a sort of a call out for action. Maybe 3 words. I mean, just really make it snappy and memorable, similar to what Pakinam said about the only good green that off-takers know. So we'll start with you, Mohammed.
Very quickly, I think, 1, the legal framework with visibility over the life of the contract. 2, the infrastructure capacity to be able to, inject this power onto the grid. And finally, I would say, I lost my train of thought, I'm sorry. No, not the finance. The political will from the authorities to really make this work. Because if we're going to realize all the targets everybody's been talking about over the past days and the past week, this is not going to happen unless the private sector is heavily involved in this transition. And sovereigns can only buy so much electricity, and they need to open this market to be able to achieve. That's my 3 cents.
I will make it very brief. We need no admin hurdles. We need a reliable system and the network. And we need cost effective as well.
Can I say the 3 words and then I say something regarding finance? Okay. So the 3 words: commitment, flexibility, incentives. Okay. Regarding finance, we have a big challenge also in the finance. Although we have EBRD who are so committed to private, not all the DFIs have the same commitment, and the worst that not all the commercial banks have the awareness. We need the DFIs to work with us to manage make all the commercial banks understand that it's a long-term finance. They need a big tenor, a long-term tenor, a less interest, some incentives from the finance side, even with the EBRD, with all the hikes of the federal, plus the LIBOR, plus the percentage, we need to challenge Yanya.
I've been thinking about this for a while, and I still don't have a great answer that can be summed in 3 words. So maybe I'll just say what we need are proven models, commitment to make those models work, and the follow-through to get the private sector together, acting on its own, and get the public sector, let us go and find new problems to explore and tackle.
Thank you very much. It's amazing what you can get in terms of the actual crystallized messages when you do this three words. I mean, Of course, we need stability of the grid. We need legal visibility, Mohammed, as you mentioned. We need to ensure that there's political buy-in, and sovereigns indeed cannot continue, buying power for long. This is the fiscal pressure. It's great to see that people are aware of this. And on the issues that you raised as an off-take, I mean, it's completely valid. Backing up, of course, on your things, on the interest rate and tenors, and commitment, flexibility, and incentives. I really like that. So it's all noted. Please appreciate that as lenders, we need to have bankable projects. And of course, we want to get our money back. And it's a different model. But then over to Daniel's point on proven models, on again commitment to the follow-through. So on this wonderful note, I would like to pass the floor to you, Mr. Gramenas. And thank you, of course, for hosting this panel.
Thank you. Allow me to stand because before saying something, my duty and my pleasure is to welcome you in this pavilion. I represent the Union for the Mediterranean, who leads a coalition that built for the first time the Mediterranean Pavilion. One of our members is a big player in energy and renewables. This being said, I listened carefully. We want the private sector to be with us. It is absolutely crucial, but of course we see it from another point of view. We are the Union for the Mediterranean, so we look at the regional scale. And we have one objective, which is integration. Integration for two reasons. The easy one is decarbonization. Let me just make it simple. The European Union has decided to be very ambitious and adopted the Green Deal. Now, if the European Union pursued the Green Deal of something which is only internal, building the most advanced environment ivory tower, but still an ivory tower, we know that this will induce the impoverishment of some markets around and some destabilization. This, in turn, will produce imported costs that will make it so that the European Union will not have enough money to achieve the Green Deal inside. So we need to look at it. Projecting this specifically in the energy sector, of course, we need to transition very quickly to renewables. First of all, for decarbonization, I mean, we are the second fastest warming area of the world, but can we do it alone? I mean, the European Union wants to decarbonize by 2050. Is it quantitatively possible without counting on the solar potential of the south or on the wind potential of the Balkans? In turn, those sectors, can they really develop just looking at local markets? You don't have the enough financial viability to develop all these potentials on looking at these sectors. But there is another reason, which is a little bit more indirect, but it is absolutely crucial. We want the regional markets to integrate because this helps us solve the biggest danger that we have in connection with climate change's impact. The Mediterranean is an asymmetric community. It's a place of rich and poor, people who can and people who can't. And this makes climate change particularly dangerous. Yes, we have forecasted impacts which on their own are already quite disquieting. I mean, 250 million people in water scarcity would impact any community. But if this kind of impact falls on a community in which there are rich and poor, sorry to say, but we are kind of going towards a conflict, a destabilization and things like that. So what would an integrated energy sector do with this? Well, actually, energy is not only energy, but it's the enabler of economic development for many. Not only energy, of course, but energy plays a part. If we integrate the markets, actually what we do is that we reduce this asymmetry. Imagine a market in which cables are connected, know-how is transmitted. Now, to do this, first, let me point out two bottlenecks, and then also send from our part a note of optimism. Bottlenecks are not in money. Money is there. First bottleneck is training and education, in the sense that renewables are going fast-paced, and you need a lot of training to be the right professional there is not only knowing how to screw a solar panel, it's also management, it's projections, etc., etc. So we will be launching programs to try and provide an extensive and above all uniform training to provide the sector with people who are able to develop it at all levels. The other bottleneck is regulation. You know, it makes perfectly sense from a financial point of view, from a market point of view, but then if you try to interconnect and you see how difficult it is to put together the different regulations of the different countries, there is a lot of work to do. To do that, we have to, of course, look at connecting the north and the south, but before that, we have a more difficult task to solve, which is south-south interconnection. One thing is to have a project here and there. Another thing is to have a transition towards renewables. To do that, there is a transition phase in which you need the backup of the traditional grid. The way current markets are fragmented, they cannot provide it. If you just plug in the local producer and then the local producers, you cannot have the sufficient backup for for securing a stable transition towards renewables. The challenge is really big. We calculate that the sum that has to be invested by 2050 is 7 trillion euros, which is quite a lot. Of course, we cannot dream of having this kind of money only coming up as public subventions or concession and this kind of things. What we need to do is build an environment in which sustainable is convenient for business. And in this sense, we are very much encouraged because what we feel here in the Mediterranean, but I think it's a general situation, is that some blockages from the past are overcome. First, you know, energy is a market, a commodity with its market, but it also serves public goods, like it's an enabler of human rights, of development, etc. And until not so long ago, these various dimensions were felt as competing. The various communities who were attached, they were against the others. Now finally, the private sector has understood that deploying also in care of environment and society is not something that hinders competitivity, but rather something that gives wings to competitivity. This is very encouraging. And the other really encouraging part is what I was mentioning. There are bottlenecks, but it's not money. Actually, you all know we are witnessing the biggest portfolio shift in history. ESG investments have passed from less than 1% at the beginning of the century to more than 26% now. The managers of the big managed assets compounds are declaring that they want to get to 60%. So money is there. Me, myself, sometimes I have to refuse because I don't have the means to use that money. But the blockage that was there before now is being overcome. There is another very, very important evolution that is making us optimistic, and that is language. Another bottleneck was that the various necessarily involved stakeholders spoke different languages. Some of these operations have to be construed having a public partner, a financial partner, a local community partner. It was impossible. What does a COP do? Yes, we negotiate, but a COP also develops a common language. And what we're witnessing is that this common language, this common way of understanding things is coming out from the COPs and finally getting into the real world, the market. So thank you for bringing to our pavilion this very important discussion. It is about this that we care. Thank you for being here.
Thank you, and thank you to the panel. Thank you very much. And if we have any questions from the audience, we have up to 10 minutes, but any questions? Or it was, oh, yes, please.
From my experience, so I'm from EBRD, with the Sakot, I work with Aida and the team. So from my experience in trying to work on private-to-private renewables, in this case was in Jordan, one challenge we notice is the bankability of the contracts. And this, I must say, and I look at you, has a bit to do with the work that still needs to be done with off-takers. So any suggestions on how can we try to educate off-takers to make these contractors bankable?
Excellent question. How do we make
For us, we had the advantage of that we are an exporting company, so our revenue is in dollars, and we made our contract tied to the dollar. But of course, for the rest of the industry and the private sector, this is a challenging point that we need to address and find solutions. So I don't know if Akinam, you can add.
And this is why I was saying that we have to make sure that there is awareness to commercial banks. Not all the commercial banks understand the magnitude of renewable and 25 years. We need to have more tenor. As Ahmed said, we are lucky with Ahmed that he is an exporting. Not all the companies exporting. You cannot ask of a loan of the EBRD with a dollar base to an Egyptian revenue company, okay? So we had, our projects is 50-50, 50 from dollar-based DFIs and 50 from commercial banks. But still, in order to scale up, that's very important. You need to run. So this is why we need to change the taboo of the finance. This is why when Aida told me, say 3 words, I meant to say the flexibility. Flexibility is not only from the government, flexibility is from the finance. We need to think in different. We need to think of the idea of guarantees and these. If you really want to scale up, there need to be certain flexibilities. Of course, with the calculated risks.
Thank you very much for the informative presentations. I just have a question on regulation, since it's clearly a big problem you are facing. I was approached recently by a member of the parliament, and since I work at the Union for the Mediterranean, he was like asking me about to give him, let's say, similar examples on regulations in the Mediterranean countries in order to let's say, to ease things or create the environment adequate for private investments in the energy sector in Egypt. And I can see that that you mentioned the regulation issue. So first I would like to hear more from you on let's say the main hindrances or main obstacles on regulations. And I'm just wondering if we have the private sector here, of course you know the regulation, so why don't we have this kind of, let's say, coordination or conversation between the private sector on the one side and the legislative, let's say, committee on the parliament on the other side, so that we make things easier? Because I was approached for this request and I'm not sure that let's say capable to do it. I will search on my side. We have, let's say, stakeholders that we work with. We can of course check with them these, let's say, improvements on regulations in the Mediterranean region, but I would like to hear more from you, since we are the people on the ground.
Okay, I think, the main obstacle with the regulation is visibility over the life of the contract. So if you look at previous examples, I'm going to speak Egypt specific, would be the feed-in tariff regulations, which was very successful because you had full visibility over the life of your contract. The same with the build, operate, and own projects that are being signed. And what we need for the private to private is exactly the same thing. I cannot have a clause in the contract that can change year on year. Once I sign, that's a closed project. All the variables have to be fixed, and that's what we need to reach to be able to get traction with the private to private and to grow these capacities, in my opinion. So it's just visibility. To put it in 2 words, visibility over the life of the contract. That's what we need.
predictability? Thank you. Any more questions? Well, if no more questions, thank you again to the esteemed panel and to our host, Union for the Mediterranean. Thank you so much. Let's give another